What do a music powerhouse, SPACs, and cannabis all have in common? Well, this morning, they have one huge star.
Hey there, Lincoln here from boacademy.org. Today I want to talk to you about the parent company. That's right, the company that's bringing together Jay-Z, Caliva, Left Coast Ventures, and so many other cannabis brands to build the largest and most capitalized cannabis company on the market. That's in California and eventually in the United States. So Subversive Capital is the fund that's taken this company public via a SPAC merger, a special purpose acquisition company, which we've covered many times on this channel. We've covered what SPACs are, how they work, and we've covered why they're such a big deal for retail investors. And today I want to show you yet another example of a SPAC that's going to build an amazing company that is allowing retail investors to get in early on its future. So I don't usually sit like this or in this location, but for this video specifically, I'm feeling a little bit fancy because we got Jay-Z, Hove, Shawn Carter, not the businessman, he's a businessman, right? We got Jay-Z on this SPAC and he is going to make a big difference for this company, and it's an important part of the deal. Because as you may know if you watch this channel, I like to invest in companies that just make sense. I'm pretty lazy. I want to invest in companies that are almost guaranteed to win. And I want to get in early on those companies and benefit from the appreciation of the value of those assets as they continue to work towards their mission. And that's how I plan to build my wealth. And I have been doing my best to pick the right companies that are leading their markets and have competitive advantages that are incredibly hard to replicate by competition. I'm looking for companies that are going to continue to dominate their markets and then continue to build that market. I want companies that see what the rest of their competition does not see. I'm looking for vertically integrated companies that do it all under the same house, because they don't have to depend on anybody else. In my own businesses, I like to control the entire customer experience, and I like to control my own distribution channels. And that's what I want for the companies I invest in. I want companies that control their own destiny and control their own customer experiences, control their supply chain, the logistics, and control their brand. And I want them to have the right pieces in place to make all of that possible and create a moat that cannot be overcome. And this is what I see in the parent company with Jay-Z, Caliva, and Left Coast Ventures, and of course Subversive Capital. So in this video, I want to walk you through the culmination of all of those pieces that I just discussed and show you how Subversive Capital's, the parent company, makes all of those pieces come together in order to take on and dominate the growing cannabis industry in the United States and in North America. But before we get to that, I want to make clear that this company unfortunately cannot be traded on Robinhood or other millennial stock brokerages because this company is not listed on the US stock exchanges. So until the United States federally legalizes marijuana for recreational use, then this company cannot be on the NASDAQ or the New York Stock Exchange. So if you want to invest in this company in the SPAC, then you will have to do that on the Canadian market or the over-the-counter markets, the OTCQX exchange, with the stock ticker symbol being SBVCF. If you're in America or you can't access the Canadian Stock Exchange, then that's how you would invest in this company. So before we hop into the details of this company, I just want to say why I am personally excited about this company, because I've always wanted to be in this industry. But now that I found this company, I feel like this is the company for me, because part of their core mission is to help undo the injustices that have been done to the Black and brown communities in this country due to the war on drugs and the continued mass incarceration of Black people in this country due to disproportionate enforcement of the laws against drugs. So besides the massive monetary opportunity here, I am very much interested in the social justice angle of this company. So now that you know why I'm excited for this company, I want to show you the numbers so that you can make up your own mind. But before we get into that, I want to ask you just a quick favor. If you enjoyed the video, like the video below, subscribe to the channel, hit the notification bell, and comment your thoughts below on Subversive Capital and the parent company. And if you want to help the channel grow and get more access to me and get direct answers to your investing questions, then join us over at patreon.bullacademy.org. You'll be able to engage in our Discord channel where we share knowledge and discuss the SPACs and stocks that we're all investing in to help one another grow our wealth together. We're a pretty diverse, tight-knit community at this point. We have over 30 patrons, from retail investors to professional investors, from the working class and to business owners. So if you're interested in all of that, join us over at patreon.bullacademy.org. Now let's hop in. Start by reading the press release that Subversive Capital put out, and then we're going to look into the investor presentation that the company also put out just recently. Subversive Capital is the largest cannabis SPAC in history, and they've announced a transaction with Shawn Jay-Z Carter, Roc Nation, Caliva, and Left Coast Ventures. This newly formed vertically integrated cannabis company will be named TPCO Holding Corp, the parent company, and will be the largest in California. Shawn Jay-Z Carter will join the parent company as the Chief Visionary Officer to guide the brand strategy and the parent company's social equity ventures, a corporate venture fund invested in Black-owned and minority-owned cannabis businesses. Entertainment powerhouse Roc Nation also has signed an exclusive cannabis partnership with the parent company, and the transaction is expected to close in January 2021. And if you want to invest in this company, you can buy the Class A units, which are currently traded on the Canadian Stock Exchange, NEO, N-E-O, under the ticker symbol SVC.A.U. And you can also buy them on the OTCQX exchange under the symbol SBVCF. That's the over-the-counter exchange. Let's read through this. So SCAC, S-C-A-C, a SPAC, have announced that they have entered into a definitive transaction agreement with a global icon, entrepreneur, and the founder of Monogram, Shawn Jay-Z Carter, entertainment powerhouse Roc Nation, Caliva, California's most trusted cannabis brand and leading direct-to-consumer platform, and Left Coast Ventures, a predominant cannabis and hemp company with low-cost manufacturing and a diversified portfolio of brands. And all of these companies are going to form TPCO Holding Corp, the parent company, which is the transaction at hand. SCAC is the largest SPAC in both cannabis and Canadian history and will seek to redefine the industry with a mission to both consolidate the California cannabis market and create an impactful global company. Shawn Jay-Z Carter, who will become the parent company's Chief Visionary Officer following the closing of the transaction, said that although we know we can't fully redeem the injustices created by the war on drugs, we can help shape a brighter and inclusive future. The brands we build will pave a new path forward for a legacy rooted in equity, access, and justice. We're creating something people can trust, and we're investing in our future, our people, and our communities. So this is a very important part of this company. They want to make money, but they also want to help pave a brighter future that will right the injustices that have been done onto Black and brown people in this country by investing in those communities and helping them build equity in the cannabis industry, which is both great for business and for our society. Michael Erbach, the chairman of the SPAC, said that California is the most powerful cannabis economy in the world, and we have a unique opportunity to consolidate the market with the parent company. With its advanced infrastructure, industry-leading operational efficiencies, proven strategy of brands, and cultural influence, the parent company is expected to be best positioned for the inevitable end of cannabis prohibition in the United States. So this part is just saying that this company as a whole will be best positioned once the United States has legalized marijuana use to continue to dominate the market. Steve Allen will become the parent company's CEO following closing of the transaction in January 2021. And he has said that in addition to building the most influential portfolio of cannabis and hemp brands in the world, the parent company's vertical operational platform has been designed for growth in future mergers and acquisitions, forging a path to redefine the cannabis industry in California. This is just saying the company is going to aggressively focus on acquiring market share and profitability through acquisitions of other companies in the market, because they believe that the market is set for consolidation. There are many players today in the cannabis market, but they believe that in the future, there will be a few, and they want to get ahead of that. SCAC has received private placement commitments, PIPE investments, PIPE, which we've covered on this channel. So if you don't know what those are, you should go watch that video so you understand how PIPE investments play a part in these deals. So the SPAC has received $36.5 million in PIPE investments at a price of $10 per share, issuable immediately prior to the completion of the transaction. Investors in the private placements commitments received to date include Fireman Capital Partners, Tuatera Capital, and Subversive Capital, the largest investors in Caliva and Left Coast Ventures, as well as Roc Nation artists Rihanna, Yo Gotti, and Meek Mill. And moving on, the SPAC has filed today an investor presentation, which we will cover in a few minutes. So give me a moment. Let's just finish this article real quick. So I've gone through here and highlighted the parent company's investment highlights. And those include a proven business model with attractive valuation, progressive operational platform, omni-channel platform, exclusive brand partnerships, and leading cultural influence, unrivaled consumer reach, strong balance sheet, industry-defining social impact, and an experienced management team. So if we read through these points, they're saying here in the first point that the merger of two top California operators, Caliva and Left Coast Ventures, will create a fully vertically integrated platform with cultivation, manufacturing, brands, retail, and delivery to support further brand development and aggressive M&A, merger and acquisition strategy. This company appears to be a high growth company, and they are doing so by aggressively acquiring market share and by expanding their plans to have cultural influence and impact. These acquisitions together constitute SCAC's qualifying transaction. So the merger is three ways between Subversive Capital, Caliva, and Left Coast Ventures. Next, they have progressive operational platform. Both Caliva and Left Coast Ventures have deep California roots that will allow the parent company to own its supply chain, enabling the company to leverage scale and profitably produce and distribute a broad portfolio of cannabis products for every consumer segment. The vertically integrated omni-channel strategy is designed to maximize gross profit and EBITDA margins, scale consumer reach, generate proprietary consumer data, and beat illicit market on price, quality, and convenience. So this part is just saying that the company is of course vertically integrated, which is a big part of my investment criteria, so I'm very glad to see that in this press release. And they have an omni-channel strategy. And another great part of this company is because they have these leading platforms for direct-to-consumer e-commerce for cannabis products, they are able to collect data on consumer behavior, which is incredibly valuable to an e-commerce company. And this unique data set will give them insight into how they can better innovate their products in the future. So we get into that more in this next point, omni-channel platform. Caliva has built and validated a scalable omni-channel business offering customers convenient express or scheduled delivery and in-store or curbside pickup, all through a single user-centric e-commerce platform, Caliva.com. The omni-channel e-commerce platform, offering both a robust portfolio of high-margin owned brands as well as third-party brands, is designed to allow the parent company to rapidly scale its direct-to-consumer reach to all Californians. Coupled with the powerful sourcing and low-cost manufacturing capabilities at both Left Coast Ventures and Caliva, this omnichannel platform will seek to offer consumers across California compelling pricing and convenience while remaining profitable for the parent company. I really like this strategy. And next, we move into exclusive brand partnerships and leading cultural influence. The company says that brand strategy and marketing playbook led by Shawn Jay-Z Carter and Roc Nation, leveraging unparalleled cultural influence of leading artists and entertainers to build the most valuable and scalable brand IP intellectual property in the cannabis industry. Moving on, we have unrivaled consumer reach. The parent company is expected to have the greatest consumer reach of any cannabis company in California, reaching 75% of consumers in the state by the end of 2021 and almost 90% by the end of 2022 through scaling of its omni-channel platform. And to the money, this company has a strong balance sheet. SCAC currently holds approximately $575 million in cash in their trust fund, which will make the parent company one of the most well-capitalized cannabis companies in the United States, assuming no redemptions of the SPAC shares. The parent company expects to pursue an aggressive M&A merger and acquisition strategy to accelerate their growth, market share gains, and profitability. Moving on, we have industry-defining social impact, which we've covered already, and that will be led by Shawn Jay-Z Carter. The parent company will fund the parent company's social equity ventures with an initial target of $10 million and an annual contribution of at least 2% of its net income to invest in minority-owned and Black-owned cannabis businesses and contribute to the effort to rectify the wrongs of prohibition through initiatives that are working toward meaningful change in the criminal justice system. These initiatives will include bail reform, industry vocational training, job placement, expungement clinics, and social equity application support. So this part is very exciting. I know some of you watching out there will say, Lincoln, cut it with the social justice warrior stuff, but if you care for business, you should care for this. Because a recent study has said that the United States has lost out on about $800 billion every year because of racial inequities in its economy. So diversity and equity of opportunity is important to business success. And I believe that this is going to be a big advantage for this company moving forward. As marijuana is legalized in the United States, there's going to be a big push to create more Black equity in the industry. And if this company can lead the way, they will get props for that. And we've started to see that consumers care about the social impacts of the companies that they do business with. So I see all of this as a net positive for the parent company. Lastly, the company calls out its experienced management team. The parent company will be led by an experienced executive team with deep knowledge of the combined companies, the cannabis industry, and the consumer packaged goods, technology, and financial industries. Following the closing of the transaction, the parent company will be led by, let's jump to the presentation, and we can see exactly who's on the leadership team. They have here on page 22 of the presentation that they are the most capable team in cannabis, led by experienced operators with consumer technology and finance backgrounds. They have Shawn J.Z. Carter, the Chief Visionary Officer, who hails from Roc Nation, Duce, and Tidal. Then they have Steve Allen, the CEO of the parent company, who comes from Caliva and Silicon Valley Bank. And then they have Dennis O'Malley, the president of Caliva, and he will be the COO of the parent company. And next they have Brett Cummings, the president of Left Coast Ventures, who will be the CFO of the parent company. And they have Drew Kornrick, who will be the Chief Merger and Acquisition Officer, and he comes from Caliva and Hightower. And they have Ann Peltz, who will be the EVP of Marketing. And Peltz comes from Left Coast Ventures and EJ Gallo Winery. And down here they have a whole bunch of experienced operators in consumer tech, in consumer packaged goods, and in business tech. So this company has a very experienced team, and the board of directors is very impressive. So let's look at some numbers. Let's start at the top of the deck and just walk through what they have here. And we can see that the deal is bringing together these 5 companies. They have Subversive Capital, which is the SPAC. They have Caliva, Left Coast Ventures, and they have Monogram, which is Jay-Z's own high-end cannabis brand, which he recently launched. And they have Roc Nation, which is owned by Jay-Z, and that is the entertainment powerhouse, which is bringing on celebrity power. And all of these companies will come together to become the parent company, with Roc Nation only being a part of the deal as a partner. And this partnership spans 3 years, which can be renewed for another 3 years if the 2 parties agree to continue to operate together. And out of the gate on page 4, the very first slide, the parent company says, "We are the largest cannabis company in California by revenue, integrated vertical footprint, brand portfolio, and balance sheet." And we can actually see that. If we go to the company's site, these are all the brands that are going to be a part of the parent company. All of these. That is a great portfolio. So we've read most of this already, so let's keep moving. And on page 7, they say that they have a unique combination of top cannabis operators and cultural icons. Number 1, 2020 net revenue in California with over $185 million in operations in 2020. They have sold 5.6 million units. They have 20% market share in California. They have 1.5 million direct-to-consumer transactions completed since adult use legalization in California. And they have 1.48 billion total follower count generated to date around partnership with Jay-Z. So this is the social influence and reach generated by Jay-Z and Roc Nation. So the breakdown of the companies and the partnerships here is that of the operational platform and the brand strategy and social impact. So Caliva is part of the operational platform, and they are the most sophisticated omni-channel platform in cannabis, fully vertically integrated operations, consumer brand trusted by both new and experienced cannabis users, And then we have Left Coast Ventures, which is also part of the operational platform, and they are the low-cost sourcing, extraction, and manufacturing leader with a diverse form factor and product portfolio and a strong distribution footprint. And then they have Shawn Enterprises, which is everything that Jay-Z brings to the table under the brand strategy and social impact. And that brings unparalleled influence, cultural marketing playbook, multi-billion-dollar consumer brand track record, and shareholder and investors. And this last point is saying that Jay-Z is going to galvanize shareholders and investors to invest in the parent company because they understand the brand power and social influence that he brings to the table. On slide number 9, they say that California is the largest and most influential cannabis market in the world with an ultra-competitive license structure and consumer market. California creates cannabis winners. So the total market opportunity in California alone is $7.4 billion by 2025. And the state has 31 million adults. And the state sees 279 million tourists annually. The parent company points out that they expect to see 20% CAGR in California revenue projections. On page 11 and 12, the company lays out their California formula, their strategy, and that includes vertical integration, which consists of low-cost flower and extract inputs, large-scale manufacturing across 7 facilities, and diverse revenue streams that includes direct-to-consumer retail and delivery, branded wholesale, and bulk wholesale. And then they have their omni-channel expansion, delivery and storefront, which you can see here. They're spreading pretty well across the central and southern California areas. And they show you their plan here for how they're going to reach more Californians over the next 2 years. So this year, they're covering 30% in Los Angeles and Orange County, 15% of the San Francisco Bay Area, and 6% of the rest of California, which is 51% in total. And by 2022, they expect to get Los Angeles to 35%, the Bay Area to 20%, and the rest of California to 33%, which will get them to 88%. And of course, the third point here is brand awareness and recognition, which is brought by Jay-Z and Roc Nation playbook. Number 4, they point out aggressive M&A, which they say that California is highly fragmented and the top operators are ready to consolidate. So the M&A priorities are large-scale cultivation, retail and delivery, wholesale distribution, and branded products. This is what they're looking for when they go out to buy companies in the market. And as we previously seen, they have a robust brand and product assortment. And they say that they are the one-stop shop for both consumers and cannabis retailers, which are their DTC platform and their B2B distributions. And they want to cover all consumer segments, key categories, and price points from value to premium. And this is how they break that down. So as you can see, Monogram is Jay-Z's recently launched brand, which will be part of this deal. And that is their highest end product. And of course, they have Well by Caliva in the high end. And then they have other brands that they own in their mid and low ends. So most of their brands are in the mid section of the spectrum for flower pre-roll, vape concentrates, edibles and beverages, and CBD topicals. On page 13, they have a very nice slide here that shows their vertical integration from cultivation to extraction, manufacturing, branding, distribution, and omni-channel retail and delivery. And on page 16, they break down their omni-channel platform in cannabis with their convenient and safe entry points for all consumers. They say that Caliva.com is their unified digital shopping platform for cannabis on your terms, generating proprietary consumer insights and data. They say that they have $20 in customer acquisition cost with 30% average contribution margin and 12.5% conversion rate on Caliva.com, which is pretty good. And 75% of their orders are placed on mobile devices. And 50% of their direct-to-consumer sales come from their own brands. And of course, the other half comes from third-party brands. So when they spend $20 to acquire a customer, the average customer makes an order of $65 in value. And then they have brick and mortar physical stores. So they have 3 stores open in San Jose and Bellflower. And they have more storefronts coming in 2021 and 2022 in the Bay Area, Los Angeles, Central Valley, and 4 additional locations elsewhere. And on page 17, they point out that their brand portfolio is the largest in California, and they address all user segments. And then on page 18, they go into Jay-Z's new brand, Monogram, which will be their high-end brand. And launching this brand, they've secured 166 media pieces, articles, and over 1 billion impressions in first 48 hours. That's very good. So they've been covering Los Angeles Times, Rolling Stones, High Times, CNN Business, Billboard, Complex, and so much more. And that's because of Jay-Z. That's great. So on page 21, they discuss the national expansion across the United States with an asset-light strategy with scalable brands. And their expansion markets of interest are the tri-state area, New York, New Jersey, Connecticut, with $9 billion in legal spending by 2025, Illinois and Michigan, with $2.9 billion in legal spending by 2025, Florida with $2.6 billion, and the Northwest with $2.6 billion by 2025. And they plan to expand to new states using licensing or co-manufacturing partnerships, which is asset light, as they say, which means that they will have low capital expenditures, which is unlike other competitors in the space. And on page 24, we get to the revenue growth, which is driven by delivery scale up, supplemented with wholesale distribution and product portfolio expansion. So in 2020, they're expecting $185 million in revenue. 2021, they're expecting $334 million. And 2022, they're expecting $593 million. So that's 55% year-over-year growth between 2020 and 2021, and 56% between 2021 and 2022. Those are great numbers. I don't know how else to say it. That's great. So as we see here on page 25, they point out that their direct-to-consumer expansion, owned brands penetration, and operational expenditure efficiencies will drive their EBITDA. So this yellow line is their gross margin growth, and this blue line is their own brand percentage of the direct-to-consumer revenues. So as they continue to grow their percentage of direct-to-consumer revenues on their platforms, they believe that they will continue to grow their gross margins. So we've already seen their plans for their revenue growth. So on page 26, they're pointing out their gross profits. In 2019, they had $110 million in revenues, and of that, they had $11 million in gross profit. And in 2020, they had $185 million in revenue, but only $36 million of that was profit. But in 2021, that becomes even better. They're expecting $334 million in revenues in 2021 and a whopping $148 million in gross profits in 2021. And that continues to get better. In 2022, they're expecting $593 million in revenues, and of that, they expect $319 million in gross profits. So all of that comes down to their adjusted EBITDA margins. They lost $42 million in 2019. They're going to lose $25 million in 2020. But in 2021, they're going to see an adjusted EBITDA profit of $34 million. And in 2022, that's going to grow drastically to $137 million in adjusted EBITDA profits. And on page 29, the last slide of the deck, they point out that they are in a perfect storm and at the right time. They see post-election regulatory tailwinds, putting the parent company at a significant discount to market comparisons, leading vertical omnichannel platform in California, unique cultural marketing strategy to bring unparalleled awareness to their brands. This is Jay-Z and Roc Nation, a world-class management team with cannabis and blue chip experience, and the parent company is expected to have one of the strongest balance sheets in the industry. Wow. Okay, that was a lot to get through. And if you're still here, I hope that walking through that entire press release and the entire 29-page pitch deck for investors gave you more insight into the parent company. What an interesting name that they gave themselves. SCAC, the SPAC taking all these companies public into a single parent company in January of 2021. I don't know about you, but reading through all of this gave me more conviction in the company, and now I want to invest in them more. I don't usually invest in OTC companies. In fact, I never do, but I see that the United States is going to eventually legalize marijuana use federally. So I do want to get into this company sooner rather than later so that I can benefit from that appreciation over the years. And with all the companies being merged here and partnering up, being from the United States, I feel secure in the integrity of the company, and the company will be listed on a Canadian stock exchange. So it won't just be another OTC over-the-counter stock. And that gives me even more confidence because at least the Canadian NEO exchange has reasonable standards for companies on their exchange. So I've put in an order to buy 51 shares of this company, of this SPAC, and that will clear on Monday, and I will be an owner in this stock at around $10.50 per share. But after making this video, I plan to buy even more shares of the company and I will probably make it a small percentage of my portfolio over the coming weeks. And if you're interested in the company too, let me know in the comments below. Let's discuss. And if you're not interested, let me know too. I want to hear why. This has been an incredibly long video, much longer than I expected to do. And I hope that has been very helpful for all of you. If it has, like the video below, subscribe to the channel, hit the notification bell, and comment below what your thoughts are on all of this, on Subversive Capital and this whole merger, the parent company. And let me know how you see all this playing out, marijuana legalization over the next few years. And if you think that marijuana will never be legal federally, and if it doesn't, then we'll all be trading on the OTC and the Canadian exchanges for the coming decade or so. And lastly, these videos are sponsored by you, all of you out there watching. So if you want to help the channel continue to produce videos and grow to reach more investors, then join us over at patreon.boldacademy.org. You will get more access to me and get direct answers to your investing questions, and you will get to engage in our Discord channel where we share resources and help one another grow our wealth together by discussing the SPACs and stocks that we're all investing in. And we're a diverse, tight-knit community of engineers and business owners and retail investors as well as professional investors. And we all share our unique perspectives on businesses to help one another make better investment choices. And if that's not enough, you will have a chance at winning $200 every month just for being a loyal and engaged patron. So if you're interested in all of that, I hope to see you over at patreon.boldacademy.org. And as always, whatever you choose to do, remember to always practice the bull mentality. The bull mentality is that we know what we invest in. We understand what we invest in. We believe in what we invest in, and we hold for the long term because that's how we build wealth in this country. That's how we give ourselves the best chance at success on the stock market. So I plan to hold this company for the long term and benefit from the appreciation of the value of this asset as marijuana becomes more and more legal across more states in the United States and around the world. I'm Lincoln with bullacademy.org. Thank you again and have a great day. Whew. Oh.